Section 2.1 starts on page 166, and this is federal income tax. Now, you keep in mind the context that we're doing with Chapter 2. Chapter 2 talks about net income, so we're figuring out how much to withhold from people's paycheck. And in this case, we're going to figure out how much to withhold from somebody's paycheck for federal income tax. Here's the concept that you have to understand. Now, pay attention. You owe a certain amount of tax at the end of the year. So if you make $30,000 in a year, after the year is done, after the year, for instance, 2009 is done, you have to figure out how much exactly that you made in year 2009 and pay tax on that amount. However, all through every week, every pay period through 2009, everybody who works gets a little bit deducted from their paycheck for federal income tax. Now, they're not paying the tax right then. They're just getting it withheld. It's almost like a little savings account. You're saving up all the federal income tax that you owe all year long, and then hopefully you've saved up enough to cover your federal income tax. And most people, a lot of times you'll hear people say, hey, I got a federal income tax return. And what that means is the amount of money that they have had taken out of their paycheck all through, for instance, the year 2009, that whole amount of money that was withheld from their paycheck every single pay period equaled more than they actually owed in taxes. You got to figure out your federal income tax anytime before April 15th of the following year. So in the example, in 2010, before April 15th, you figure out how much you actually did owe. And hopefully the amount of money you actually did owe is less than the amount that was taken out of your paycheck. Now, you might get to the situation, and it happens all the time, that people have had too little taken out throughout the year. They have claimed the wrong amount of exemptions or something like that. We'll talk about that pretty soon. And in that case, if they owe the government more than was taken out, they have to write a check. So for instance, if you owe $10,000 in federal income tax and they only took out $8,000 throughout the year, you're going to have to write a check. You're not going to get a return. You'll have to write a $2,000 check. So this is pretty important stuff to understand. And I also want you to understand the concepts. The Section 2.1 really has a very little math, but some very, very critical concepts. So the first concept I want you to understand is we're not figuring out the actual federal income tax per se. Right now we're just figuring out how much to withhold from a paycheck based on what somebody tells us. Because when somebody goes to work for us, or when we go to work for somebody else, we tell them if we're married or single, and we tell them how many dependents that we want to claim. Now, as a society, what we have done with our tax tables, the way our taxes are calculated right now, we have decided to not charge everybody the same amount. So right now, we don't charge everybody a flat percentage federal tax. As a society, we have decided that if somebody's single, they pay a little bit more perhaps than somebody who's married. Or if somebody has 5 children who are depending on that paycheck, we're not going to tax that person as much as somebody who has no children. Okay, and I'm going to take a look at these tax tables, and hopefully this is going to make sense to you. So the tax calculation is different than how much we take out, but how we're going to figure out how much to take out is the way everybody figures it out, and that's just with a tax table. You can go right online and see federal income tax tables. The book has them here, and that's what we're going to be using. And the book's tax tables are all going to be on page 788 through 791. So I'm going to zoom way in, and I'm going to scoot back to page 788 and see if we can figure out these tax tables and get some insight on how this all works. First off, when you get these tax tables, they'll often come in a book in real life, or else you'll get them off a website. You got to make sure you're on the right pay period. So this tax table, for instance, is on page 788. This is for single people who are paid weekly. Here's for married people who are paid weekly. And when you look at tax tables in a book, you'll have semi-weekly, monthly tax tables, you'll have to make sure that you're on the right page. That's critical to make sure you're on the right tax table. So let's take a look at these single people. Now how we're going to read this is simply this. If somebody gets paid on a weekly basis at least this amount, but less than that amount, this is how much we take out. Okay? Now we got to look over here and get in the right column as well. Now these are the number of withholding allowances, or some people call them dependents, that people have claimed. So let's see if we can look at this. So for instance, this is for somebody who has claimed 1 withholding allowance or 2 withholding allowances. You can look at that as dependents, okay, children if you will. There's exceptions to that, but I want to just keep it simple for now. So let's see if we can decide on something here. Let's take a look at this column for somebody who has 1 withholding allowance. If they make at least $80, I'm sorry, that's a 60. If they make at least $60, but less than $65, and they have claimed 1 allowance, we don't withhold anything from them. Now remember, this isn't really calculating their tax, but this is just figuring out how much we guess that the tax is going to be, and hopefully we guessed right at the end of the year. So look at, they don't owe anything. But look at this. The guy who had no withholding allowances, he has to pay $1. Okay, or we have to withhold $1 from him. Let's take a look down the pike here a little bit. Let's say somebody has made at least $125 at less than $130. If he has 1 withholding allowance, we have to take out $2 for federal income tax from him. That's what his withholding is, $2, just right off the table. If he has no withholding allowances, we take out 8. Okay, so what does this tell us? And if we look through the tables, that's going to bear out all the way down here. So basically, I think the generalization we can say right now is the less withholding allowances that we put down, the more that's going to be taking out of your pay. So people might say, well, you know what? For single kids, they're always going to wonder, well, do I choose 0 or 1? Because the employer is going to hand you a form when you go to work somewhere, and it's going to say, how many withholdings? Do you want 0 or 1? Well, if you mark 0, they're going to take more out of your paycheck. Is that good or bad? Well, that's up to you. Do you want a refund at the end of the year, or do you want to have to pay in? If you want a refund, it's kind of a forced way to save. You're going to choose the smaller amount, choose the 0. If you want more money in your paycheck every week, and you're thinking maybe you don't have to pay for some reason, go ahead and choose 1. Okay, so this is the way that the tax tables work, and it's really just as simple as that. And as we really scroll down through here, we can see, in fact, if you look, I'm looking way down on tax tables, and you please look with me. I can't really get it on the screen right now, but if I look way down on this particular tax table, people with 8 dependents don't even have to start paying anything until they've made over $540. So the more people make, the more you make, back up here, sorry, the more you make, the more you have to pay, and the greater amount of dependents that you claim, the less that gets taken out. So that's the concepts I want you to understand. The question is, a friend of yours is going to say when they go to get a job, do I choose 0 or 1? And you're going to be able to now tell them, well, you pay 0, choose 0 if you want a chance at getting a tax return at the end of the year. Choose 1 if you want a little bit extra in your pay every month. I think probably the prudent thing is to choose 0, because a tax return is sure nice. And writing a check at the end of the year is bad, and the government doesn't take kindly to people who don't have the money. You can't really tell the federal government, I just don't have the money. They're going to penalize the heck out of you for that. So that's how we read the charts. I'm going to go ahead and make another video on actually doing a couple of these questions with you now that we've talked about these, just to make sure that you have done right. So we'll call this section 2-1A.